Morning, everyone, and welcome to our seventh webinar of 2024 as part of our Exchange webinar series. As we approach the January 1st, 2025 start date for payroll contributions to the state's paid family and medical leave program, we want to ensure that both our members and the business community fully understand the program's details, benefits, and financial aspects. I'm Curtis Picard, President and CEO of the Retail Association of Maine. We represent retailers of all sizes across the state and have been around since 1937. We're pleased to be co-hosting this morning's webinar with the Maine Grocers and Food Producers Association, as well as our partners at Hospitality Maine, Maine Tourism Association, the Maine Pharmacy Association, and the Maine Society of Health System Pharmacists. We're thankful to have an expert on labor laws and governmental affairs with us this morning. We'll hear a brief background and program overview of Maine's paid family and medical leave program and how you and your business will be impacted, followed by an opportunity for questions and answers.
Good morning. My name is Christine Cummings. I'm the Executive Director of the Maine Grocers and Food Producers Association. MGFPA is a membership-based business trade association representing Main Street businesses, independently owned and operated grocery stores and convenience stores, supermarkets, food and beverage producers and processors, wholesalers, and distributor companies. And we're pleased to be co-hosting this morning's event to bring you all the latest information on Maine's paid family and medical leave program. The program rules are being finalized, and it's imperative that you all are at the table to ask questions and to ensure there's clarity where it's needed. Next, I'll turn it over to our partners at MTA.
Thanks, Christine. My name is Tony Cameron. I'm the CEO for the Maine Tourism Association. I'd really like to thank our partners, the Retail Association of Maine, the Maine Grocers Food Producers Association, and of course, Hospitality Maine. We work well with all of our partners. At the Maine Tourism Association, we represent all segments of the tourism industry, and our mission is to really keep the industry sustainable. And this is one of the ways that we try to do that by helping provide information to businesses of things that they have to do to maintain their business and their employees. We also operate the 7-state visitor centers, soon to be 8. We produce the official state publication on behalf of the state of Maine. And we also do a number of other things association-wide, including workforce development. And so we're happy to be here and be a part of this. And I'll turn it over to Nate Cloutier.
Thanks, Tony. Good morning, everybody. Thanks for being here. I'm Nate Cloutier. I'm the Director of Government Affairs at Hospitality Maine. We're a statewide trade association representing over 1,400 different restaurant and lodging establishments of all different sizes across the state. We're very pleased to bring this to you, and thank you to our hosts and our sponsors our partners rather, for being here. And thank you to the Department of Labor and Reggie, who's a very what's the word, well seasoned in this now, so he's got this down. So thank you to everybody for this.
Great. Thank you, Nate and Tony. We'd like to take a moment to recognize today's series sponsors who have invested in and supported the work of our associations. So a big thank you to Hannaford Supermarkets, Poland Spring, Shaw's Supermarkets, Associated Grocers of New England, Altria, Bizzuto's, CNS Wholesale Grocers, Coca-Cola Beverages Northeast, Hood, and Pepsi. And a few procedural notes before we start. First, all of our attendees are muted, so we won't hear each other's background noise, and you will remain muted throughout the webinar. We will have a question and answer period at the conclusion of the presentation. So to ask a question at any point during the presentation, simply move your mouse towards the bottom of the screen where there's a black bar and a white Q&A icon. You can type your question in the box and click send. Finally, this webinar is being recorded, and it will be available after the event for interested participants to revisit. Curtis, I'll hand it over to you to introduce Reggie.
Joining us this morning, we'll hear from Reginald Parson, the Deputy Director of Maine's Paid Family and Medical Leave Program, where he assists in the implementation of the state's paid leave law, providing eligible workers with up to 12 weeks of paid leave for family or medical reasons. With over a decade of experience in public administration, Reggie excels in managing complex programs that enhance public services. He also has extensive experience in policy development, working on a variety of issues ranging from corrections to health and human services, and from his time serving as legislative staff for the Maine House Majority Office and 2 former House Speakers. A graduate of the University of Maine School of Law and the University of Wisconsin-Oshkosh, Reggie is a trusted leader in navigating Maine's evolving employment landscape. With that, again, welcome to the Exchange webinar series. And next, we'll turn it over to this morning's speaker. Reggie, you can take it from here.
All right, awesome. Well, good morning, and thank you, Curtis, and thank you all for what I hope will be a very informative webinar to learn and talk more about paid family and medical leave. As Nate has said, becoming even more seasoned, I would say, in this implementation process. There's a lot that I've certainly learned in this process, and there's a lot more learning to go. And I hope that we can continue to spread that knowledge to you all as you all are thinking about this new law. So what I will do is go ahead and share my screen where we'll have the presentation begin. So you bear with me 1 second. Okay, and go from again. Okay. So hopefully everybody is able to see the introductory screen, but this is essentially what we're going to be going over this morning. There are going to be some things because this is a new law. You know, Maine is the 13th state, including the District of Columbia, to adopt a paid family medical leave program. And with our law in particular, there are going to be some things to think about beginning in 2025, which I'll talk about more. And then really some things to think about in 2026, especially when we get to the benefit side of things. So, you know, we certainly are going to try to not, you know, make people feel overwhelmed and know that this is going to be a process. So with that, I will go ahead and begin with just really a general overview of the program and where this all started. So last year, Governor Mills and the state legislature adopted paid family and medical leave. As I said before, Maine became the 13th state, including the District of Columbia, to adopt its own form of paid family medical leave. Our law is going to provide up to 12 weeks of leave for the reasons that you see here, and I can talk more about what those reasons are in a later slide. And then finally, this is a pretty broad-reaching law, so meaning that it's going to impact many sectors of our state's economy, with the exception of the federal government. That was an explicit carve out in the statute that paid family medical leave will not apply to the federal government and its employees. So to talk about kind of some key dates. So as I've said before, we're currently in the implementation phase of this program. So when the law took effect last October in 2023, that was the ability for the department to have the resources needed to get things up and running and meet all the statutory requirements that we have to meet. But the first thing I'll talk about is the Paid Family Medical Leave Benefits Authority. And so this is essentially a new board to the state. And to kind of talk about what their general overview and what their role is. So this is a pretty diverse board of individuals. And what I mean by that is you have folks coming from the private sector and the public sector, as well as some members from the current administration. But their role is to essentially take, you know, provide their expertise and guidance in the respective sectors that they represent. And help us as a department think about things as we're not only working on implementation, but going forward when benefits go live. These meetings are public. They do meet in Augusta, but you can find more information about who is serving on this authority and what their meeting dates and times are on our webpage, and that is at www.maine.gov/paid leave, and you will find them under the Paid Family Medical Leave Benefits Authority tab. And to kind of talk more about how these folks got on the authority, so 11 of the 15 individuals went through a public vetting process. So they were just recently nominated by Governor Mills earlier this year, and then were confirmed by the state Senate. So they've gone through a public vetting process. But some things that we need to do on our end as a Department of Labor is to adopt rules. So I'll talk more about kind of the rulemaking process in a later slide. But by January of 2025, rules must be adopted for the program. But another huge milestone that we also have to meet, and this is where employers and employees are going to be impacted by this, is the beginning of payroll deductions. And I'll talk more about what the premiums are for the program. But beginning in January, that is when folks are going to start to feel the effect of paid family and medical leave with the beginning of those payroll deductions. And then finally, in 2026, benefits will go live for the program. So to talk more about the rulemaking process. So before I talk more about the two versions of the rule that we've put out and kind of the things that we need to do next, I'll go back to really the beginning. So early this year, we held quite a few informal listening sessions because we know that this law, again, was going to have a broad reaching impact on the state's economy. And I think it was important for us to try to get feedback to think about things that we should think about when developing the rule. So we did 4 informal listening sessions touching on 4 different topics. And you can also find those recordings of those listening sessions on our webpage, which is, I'll plug the website again, www.maine.gov/paid leave. And you can find those under the educational resources tab. But those listening sessions were helpful for us to again consider what we should be, putting in the rule, what we should be avoiding, things that we need to also comply with statute as well. But now moving forward to the formal rulemaking process, we took all those feedback into account from the informal webinars and listening sessions, and wrote the first proposed rule that we put out in May of this year. So that solicited a lot of feedback from the public, and kind of gave the public a first idea of what paid family medical leave was going to be in the state of Maine, in terms of what the criteria is. And the statute did outline some things, but how this program will run on a day-to-day basis. Because of all of the feedback that we received, and we received, I want to say, just over 1,000 comments and under 300 people commenting on the rule. And we also held a public hearing on this as well on the first time, really both times. But either way, we received a lot of feedback. So because of that, we decided to put the rule back out a second time. And that also solicited a lot of good feedback and comments. And we also held a public hearing on the rule, I want to say in September of this year as well. And this second rulemaking period allowed us to receive just under 600 comments and just under 280 people. So again, there was a lot of public conversation and debate about this rule, and we're thankful to receive those comments, which we hope that when the final rule is out, by January of 2025, it reflects the things that we've heard. So to talk about the premiums or the contributions for this program. So the law, I should say the law, yes. So the law is, when it comes to the contributions, it'll be set at 1% of an individual's wage rate that will be split between the employee and the employer. And so this is going to be a program where the employer and the employee have a stake in this process. Individuals such as self-employed individuals or tribal governments can elect coverage into the program. And if they do decide to elect coverage, they'll be paying 50% of the premium rate. But to help kind of break down what is this going to look like, potentially for employers and employees alike. So again, this is going to be a program where the employer and the employee are going to be contributing into the program. So we use 2 general examples of an employer with 15 or more employees, for example. So I'll start there. So if there are employers in the state that have 15 or more employees, and we use the example of $1 million a year payroll, that 1% for that business would be $10,000. In this case, you'll see the breakdown. So the employer will be paying 0.5% of that, and the employees will also be paying 0.5%, equaling a total of 1% for the program. However, you'll see a different number when it comes to employers with less than 15 employees. So again, we use the general example of an annual payroll of about $250,000. For a business of this size, the employer is exempt from having to pay the employer share, but 0.5% still must be deducted, and that can come entirely from an employee's pay, or the employer can voluntarily choose to, but is not required to pay the 0.5% and not have anything deducted from their pay. So this is something that we have tried to break down based on our interpretation of the statute. And so again, we're happy to address any questions around premiums and all of that. And again, this is where in 2025, the payroll deductions will begin for the program. And finally, to kind of touch on, because some of you might be asking, okay, where's all of this money going? Which is a fair question. The premiums that are going to be submitted to the state for this program will be placed into a trust, which would be the Paid Family and Medical Leave Fund. And the purposes of that fund is to, one, pay for benefits and any administrative cost to run the program. So this fund will be, again, in the form of a trust and should not, or hopefully will not, be used for any other purposes. So to touch on the reasons for leave, and these are just general examples that we outlined. So obviously for family leave, for employees who are looking to expand their family, or for bonding claims, that could be one potential reason to take family leave, or an employee might need to care for a family member with a serious health condition. For medical leave, it's for the employee tending to their own medical needs. And then for safe leave, these are for either employees or the employee's family member who may be experiencing some form of domestic abuse or violence and need to take time off to address those needs. And then finally, for any emergencies related to military deployment. So one example could be, you could have an employee whose spouse who's part of the military, and they learn that their spouse is going to go on active duty. So that employee could take time off to handle the transition of that taking place. So again, these are just the general reasons why individuals could take leave. And to talk more on the types of leave. So individuals, as I said before, could take up to 12 weeks of paid leave. So if the employee needs to, they can take it consecutively, or they can take it in different forms. So one of the things I'll talk about is intermittent leave. So this is basically the employee still working, but they may be taking blocks of time off to handle whatever qualifying reason that they need to take it for. Or reduced leave, where again, the employee is still working, but their normal schedule is different because they're taking paid family medical leave to deal with, as we see here, for an example, a family member with a serious health condition. So to talk about the requirements and eligibility, and this is going to be something that I think is going to be more focused towards 2026. So again, we want to help folks, kind of understand and not feel overwhelmed about what to worry about in 2025 versus what to worry about in 2026. So again, this is going to be more of a 2026 thing to worry about and think about. So there are eligibility requirements for this program. So I'll start with kind of the notice provisions. So absent an emergency, generally the employee must give notice to the employer of their intent to use paid family medical leave and try to create a schedule for that. Proof must be provided that the individual qualifies for one of the approved reasons on the leave. And again, this is going to be more towards, again, 2026, and this is going to be done through an application process. So, there might be different types of certification that might be required based on why the employee is asking for leave. And we hope to clarify that more down the road, especially as we get to 2026, when benefits go live. And then there's also an earnings requirement for this program too. And so we try to outline a general example of what is the state average weekly wage. So the state average weekly wage is a number that is published on an annual basis by the Maine Department of Labor, and they take into account different wage data from the private and public sectors. But for the purposes of our law, part of trying to determine what someone's eligibility is and how to deal with their weekly benefit amount is tied to the state average weekly wage. So we just provided a general example of how to calculate this. So the state average weekly wage for 2024 is $1,144. So if you multiply that by 6, that is how much, as you see in the slide, hopefully, if you can see it, that they would need to earn $6,864 over 4 of the last 5 completed quarters before accessing that benefit. This is something that the state will be determining on whether they met that monetary benefit based on the wage data that's provided to us if we don't have it on file already. So again, this is something the employer does not have to worry about calculating whether an employee has met the state average weekly wage. And then finally, kind of getting back to notice again, undue hardship. So I will kind of pause here and say, the concept of undue hardship and other laws in the state of Maine might be familiar to some, but for paid family medical leave, it's kind of unique. So Maine is the only state in the country in terms of having, our own paid family medical leave laws to have the term undue hardship. And this is something that certainly has generated a lot of public debate, and certainly in the comment period, for sure. And we're happy to try to address what undue hardship is, in the context of how we try to, take into account what the statute says versus what we put in the proposed rule on how the employee and the employer navigates through undue hardship. But the hope is that when benefits go live in 2026 and employees start to request or try to schedule leave, that a conversation will happen to try to help mitigate. The employer might saying that might, depending on what the schedule is, might cause an undue hardship versus what the employee is trying to schedule leave for, and try to create some conversation and hopefully resolution to avoiding any undue hardship if possible. But again, happy to address any questions about that. So this is some important information that I think employers need to be aware of, and I'll talk more about notice again in the last bullet point. But the first thing I'll talk about is job protections. So there are job protections surrounding this law. So meaning that employees who have been employed with the employer for 120 days or more, they are entitled to returning to their job or job equivalent to that, which includes the benefits and any other benefits that they were given prior to taking leave. And so again, there are job protections surrounding it. So for example, if you have an employee who may have been with you for, 6 years, for example, I'm just throwing out a random number, assuming they've asked for leave and apply and eligible, they are entitled to return back to that job versus someone who may be with you for 2 weeks and for whatever reason they need to take leave. In those circumstances, that employer, would not be required to hold that job for them, if it's under that case. But again, we're happy to try to address any questions about that. But the next thing is private plans. So the law does allow for an employer to, consider, pursuing a private plan option. So essentially, if the employer believes that they have a private plan substitution that is substantially equivalent, which that term is pretty unique as well. I would say the proposed rule kind of lays out what the minimum criteria is that we will be looking at to determine whether a private plan substitution is substantially equivalent. But either way, if the employer wants to pursue this option and applies to the state for this, whether it's a plan that is purchased on the market through an insurance company or a paid family and medical leave plan that has been developed by the employer internally. But I would say for the self-insured plans, the plans that the employer has developed, those require a surety bond to be accompanied with that. And again, we're happy to address any questions around the private plan substitution process. But essentially, if the employer is approved of a private plan substitution, what we said in our proposed rule that the employer and the employees will not have to pay premiums to the state for a minimum of 3 years, but they would still have to comply with the terms and conditions in order to maintain that substitution. Because the department does have the right to withdraw that if any of those terms and conditions are violated. So that could mean making sure that the premiums that the private plan charges do not exceed what the state is currently charging for premiums, or not filing wage reports that are required. So those are examples of some of the terms and conditions that are outlined in the rule. So yeah. So and then finally, there's notice requirements for employers, and this is something that is required by statute. So the employer is required to notify employees that we have paid family medical leave in the state of Maine. And currently, we do have on our webpage, which I'll plug again, www.maine.gov/paid leave. We do have under the employer resources tab an employee labor poster that I would encourage employers to post now, especially as we're getting closer to the January 2025, because by statute, the employer has to satisfy certain notice requirements. And if for some reason the employer has been found not to have properly notified employees about paid family medical leave, the law explicitly states that the employee's obligation to let the employer know that they are trying to schedule leave or taking leave is waived. So again, I'm happy to address or try to answer any questions about that. So I'll talk about benefits. So obviously people are paying into this program and they're probably going to be wondering what's the benefit for me. So generally, there is a benefit tier tied to it. I'll try to explain it, but I have 3 examples that I think will make it hopefully more clear. But benefits are tied, again, back to the state average weekly wage. So that number that I said before, which is currently $1,144, this is how we're calculating their benefits. So when someone applies to the state for paid family medical leave, we're taking into account their wage, the wages that they report to us, or if we don't have it on file. But to kind of break down what these tiered wages are. So at tier 1, if an employee's wages are at or less than 50% of the state average weekly wage, they're going to receive a 90% wage replacement. And then any earnings over 50% of the state average weekly wage, we also have to calculate that as well. And that's going to be replaced at a 66% wage replacement. Benefits are capped for this program. And again, they're capped at the state average weekly wage. When 2026 comes around, I don't know what that number will be, but again, that number is subject to change. So hopefully with the 3 examples, it'll make things a little bit more clear. So the first example that we use is Morgan, who's taking 8 weeks off to care for her mother who has a serious health condition. So, and she's earning about $57,000 a year. So as you will see, we broke down what is Morgan's weekly wage. What is she earning on a weekly basis divided by 52 weeks? You will see that her weekly deduction for paid family medical leave. So again, when those premiums are coming out in January 2025, this is how much, looking at a per week basis, trying to break it down to hopefully make things more clear, how much she'll be paying. So for Morgan, she'll be paying about a total of $285 a year for paid family medical leave, or $5.48 a week. But because Morgan's employer has less than 15 employees, all of the 0.5% could come from Morgan's pay, or again, the employer could voluntarily, choose not to deduct the 0.5% from Morgan, and pick up the tab for all of the employees. The breakdown of the tier 1, tier 2. So as you'll see, looking at the wage data that's provided to us at 90%, she's going to be earning about $514 a week. But because Morgan's weekly wages exceed 50% of the state average weekly wage, we have to figure out what is 66% of $524, which you'll see is $345. So when you combine both the tier 1 and tier 2 wage replacement, Morgan's going to be earning about $859 a week for the next 8 weeks while on leave. So using a different example, Michael, who's earning about $35,000 a year, and he's taking 6 weeks off to bond with his newborn daughter, so potential bonding plan. So you'll see here what Michael's weekly wages are when we break those down by 52 weeks. And then you'll see how much is coming out of his pay for paid family medical leave, which would be about $175 a year. But because Michael is also working for an employer with 15 or more employees, the employer is also going to be essentially matching as well. So they'll be paying $3.36 a week, or $175 a year for Michael for paid family medical leave. And then again, breaking down the tier 1 and tier 2 wage replacement, you'll see in total, Michael's going to be earning about $580 a week for the next 6 weeks. And finally, to kind of touch on the capping of the weekly benefit amount and all of that, and to kind of highlight what the law is requiring us to do in terms of capping weekly benefits. So Joe, who's earning about 90 grand a year, needs to take 4 weeks off to recover from a surgery. Again, you'll see how much Joe is earning per week. You'll see how much is being taken out of her pay for paid family medical leave. And then because Joe is also working for an employer with 15 or more employees, that employer is also doing that match of $8.65 a week for paid family medical leave. And then you'll see the calculation of their benefits. So you'll see in total, they should be earning about $1,278. Well, the laws per week. The law requires us to cap the weekly benefit amount at whatever the state average weekly wage is. So if paid family medical leave was live in 2024, we calculated their benefits. It turns out they should be earning $1,278, but in reality, they'll be earning $1,144 because we are required to, again, reduce their benefit and cap it at the state average weekly wage. So with that, that concludes my part of the presentation, and I'll stop sharing my screen and open it up to any questions, which I think we see I see quite a few in the Q&A. So.
Oh, well, thank you so much, Reggie.
Yeah.
That was really helpful. We're really appreciative of you taking the time to speak to us all this morning. And so, as we said, we have a handful of questions, and Curtis and I are going to do our best to try to moderate them for you and consolidate those that are a little bit duplicative. So,
Okay.
Curtis, I think you were going to start off with the employee threshold question.
Yeah, so and I'll try to, I guess, consolidate this because there's multiple people that are asking similar things, but not exactly similar.
Okay.
But it's related to calculating the number of employees and weeks that work. So the very first question in the chat, I'll read that one verbatim, but and I'll chime in with a couple other ones. In the period of October 1st, 2023 to September 30th, 2024. If you have 16 employees who worked for more than 20 weeks in that fiscal year. However, in the period from October 1st, 2024 to September 30th, 2025, you'll only have 10 to 12 employees who work more than 20 weeks. So this one is asking how your contribution status can change and how do you go about doing that? And then other ones are related to how do you determine the 15 employee threshold initially on an ongoing basis?
Yeah.
Another one asks, how do we approach compliance in terms of employee headcount? Our workforce varies in terms of the number of employees, which can be more or less than 15 in every given month.
Right.
I think those were the three. So that's, all essentially in the same vein.
Okay. So that's a good question. It's probably a good time to plug in the portal, which I didn't mention in my presentation. So in January of 2025, the premium deductions will begin, but also employers will have to register for the Maine paid leave portal. And so this is something that's currently under development, and we are working at warp speed with our vendor to make sure everything is good to go before it goes live. But when the portal goes live, the employer is going to have to kind of really take into account all of the employees that you have on your payroll during that period. And it's going to be a self-reporting mechanism. So that would be one way to, and again, this might involve kind of doing a deeper dive into, who's been on your payroll, during that year, and try to calculate whether you do have 15 or more employees. And so the proposed rule lays out who do you count. So it's a pretty broad reaching group. So you're going to be counting full-time, part-time, seasonal, temporary, intermittent employees, any employees on your payroll during that period. Also factoring in, who's been on that payroll for the 20 weeks or more to determine that liability count. So it is a little bit of a convoluted formula, but the law, again, was trying to capture as many employees and employers as possible. So hopefully I addressed it, but it will be a self-reporting mechanism that employers will have to make their best assessment and judgment when they report to us, taking into account the rule.
Thanks for that. Jumping to the next question, which is somewhat related, I'll read this one as well. As a seasonal employer who hires over 100 international J1 staff who work for approximately 9 weeks a year, many who do one 9-week session or one 9-week season, do you need to deduct the money contributions from those folks? And if you are above that threshold of 15 employees?
Yes, a good question. So the answer is yes. So again, the law didn't exclude anyone except for the federal government. So that was the explicit carve out. So seasonal employees of, potentially those categories who might come here and work for a small period and then return, you still would have to deduct that 0.5% from their wages.
All right, I'll take the next question. Do payroll companies absorb the additional cost of running this program?
I guess that would be kind of dependent on what I guess how the payroll company is navigating through existing costs. We have been working with a ton of payroll companies, and if there are payroll companies that we have not heard from, it might be a good time to let us know now, so we can make sure that they have the wage specifications. But I unfortunately I don't know about the cost to the payroll company in terms of their financials, but we can provide them with specifications if they need it.
We touched on this a bit, but if you could just clarify again how this law impacts self-employed owners of small businesses.
Yeah, so that's a good question. It would depend on, if there are some self-employed entities that might have W-2 employees. So that again, it's all just kind of depending on what is the structure of that self-employed entity. So if you are a self-employed individual, like it's just you, then that could mean you would need to elect coverage into the program. But if you're a self-employed individual that might have, W-2 employees or employees that you pay a Maine wage to, that might look a little bit different. So again, I think it's all just in the context of the employer structure and needing to assess whether am I self-employed and I just need to elect coverage, or if I have employees, do I need to report them? And so it would definitely be it would be very specific to the self-employed individual.
This next question is from a larger employer, a nationwide company, and I'm glad they asked it because, this is one of the questions we've encountered over the last year or so. Is there still payroll withholding effective 1/1/25, even if our company will have a private plan with the Hartford? Typically, if we have a private plan for state paid family leave, we don't start payroll contributions until the state pay benefits begin, which would be 5/1/26. But I know you covered this in the presentation, but
Yeah, so I guess that's a good time to talk about the private plan process for us. So what we laid out in the proposed rule, and again, it's subject to being adopted, that private plan application process will open April 1 of 25. So if, and I would love to kind of learn more about this particular question because if, yeah, so I guess I will just kind of leave it at that, where we'll open up our private plan application process in April of 25, and then we'll review those applications accordingly to determine whether they met a plan, met the substantial equivalent criteria.
yeah, and I guess I would point out also that that was one of the things that changed in the various drafts of the rule. I
Yeah.
think initially it wasn't clear when these private plans could apply and be approved, and you guys have clarified, and I realize it may not, satisfy folks, but at
Yeah.
least it's April now, and my
Yeah.
understanding is the department is going to work quickly to determine whether or not these private plans qualify or not. But
Right.
I think our impression is, at the very least, these companies are going to have to pay in for at least that first
Yeah,
quarter.
right. Yeah. Okay. Yeah. So to kind of get into that, yeah. So when we put the rule out for the first time, we said everybody's in for a whole year or 16 months until when benefits go live, and private plan application process will begin January of 2026. But because of the comments that we received, and which were many legitimate and understandable, we did, reconsider our decision. So at least for one quarter, everybody's going to be paying into, the fund. For the, and I would say more about the fund. This fund will again help with paying for benefits and administrative costs, but for at least until the rule, well, assuming the rule will be finalized, everybody will be paying in for a quarter, and then we'll open up the application process in April of next year.
The next question is, how will mental health issues be treated, and are those who are experiencing mental health issues allowed to receive paid family medical leave?
That's a good question. This is more of 2026, but it would depend on the context of whether they, that could potentially be a medical leave claim potentially. And it would just really depend on when that applicant's submitting that, if they're, claiming a mental health type of situation, that, we would assess whether that meets the definition of potentially one of the four leaves, especially around medical leave. So it could be possible, yes.
Right. The next question is, the state average weekly wage minimum benefit is the total amount of 6 times over those quarters. I'm not sure if they're referring to minimum benefit. I think it might be maximum benefit, which I know is calculated right now at, I think, 11,144, right?
Yeah, that's the maximum benefit amount someone could receive on leave. The 6 times the state average weekly wage is the earnings that an employee must make in order to meet that eligibility requirement. And we recognize that, employees work more than one job. So when they apply to us and we take their wage data, they could have hit that mark either with one job or two jobs. But yeah, the 6 times the state average weekly wage is the financial eligibility criteria, and the weekly benefit amount is the, how much they're going to be earning on leave for whatever
So
time.
it's, yeah, so it's essentially between $6,000 and $7,000.
Yeah, for the earnings. Yeah, for the earnings requirement. Yeah. Yeah.
I was just scrolling through to see, I know we have quite a few questions here, and so I just want to let folks know in terms of our approach. We'll go through, we had allotted a full hour, so take some more questions, and then what Curtis and I thought we could do along with Nate and Tony is any unanswered questions, we can get those in writing from you and follow up with folks. So we just want to
Mhm.
make sure we do have a chance to get everyone's questions answered. The next one is, and I think we did speak to this, do part-time and seasonal staff qualify? And the other question, it's two-part, is pregnancy considered medical leave?
I mean, it could be, I guess it would depend. Again, it could be a family or a medical leave. It would just kind of be dependent on what information that's given to us by the applicant.
The next question is related to undue hardship. How does undue hardship exception interact with ADA, American Disabilities Act, or the federal Medical Leave Act?
So again, the term undue hardship is pretty unique to Maine paid family and medical leave. I don't know how it will interact with the other laws per se. But what I do know for paid family and medical leave, this is going to be one where I think the employer and the employee are going to have a conversation and determine, hopefully, if the employer is claiming an undue hardship, then, hopefully the employer and the employee can kind of help navigate through that. It would depend on the context of what the nature of the employer is. For example, if you have an accounting firm, that undue hardship might look a little bit different versus someone who's in the retail industry, and depending on the type of season, I'm thinking of Black Friday, for example. That's probably one of the busiest seasons for a lot of places in the country. And so and then two, we do have a waiver process, I would say, and this is in the proposed rule, where if the employer and the employee agree that the scheduling of their leave will not cause an undue hardship, then hopefully the employer and the employee can agree to that waiver, and that will help expedite the claim process with that. But yeah, it's going to be a new tested theory, I think, for 2026.
All right. Does an employer have to post if the employer doesn't qualify? I think this is in regard to the poster.
So I would just to be cautious because there are penalties associated with failing to post the poster. I would just err on the side of caution and post it. Yeah.
And we linked to the link to the poster in the chat as well, so folks can go right there and download the poster now.
Okay.
This next question is kind of an interesting one. And so I'll read it verbatim, but my sense is it goes to the issue of job protection after the 120 days. So this is a scenario where someone starts leave on day 91 of employment. So they've been employed for 90 days, but they submit an application for leave on day 60 after they've started their leave, because they get 90 days after leave starts to submit an application. So is this person's job protected?
So, I mean, my cautious answer is yes, because the law doesn't distinguish whether if you applied 60 days before or 90 days after you've taken your leave. But I think that's something, we will try to hopefully clarify as we're going later down in the process with that. But I would err on the caution of saying yes, because the law doesn't say 120 days if only you do X or apply 90 days after.
Right. Are the benefits considered taxable income or tax-free income?
So the benefit, yeah. So that's the $1 million question that we have been waiting for some guidance from the IRS, because every paid leave state is waiting on really the taxability implications of it. I don't know what the state of Maine is going to do separate from the IRS, but the benefits could be subject to tax, but I'm saying that cautiously, waiting anything that comes from the legislature or from the IRS.
Right. This next question, I'm not sure if you can answer it because it's more of an opinion question, but it's really how much administrative burden this is going to put on individual employers.
Mm-hmm.
I I mean, that's a tough one to answer, and I think it really depends on, you know, a lot of different factors.
Yeah, no, and in the implementation process, we certainly have heard that, and that's something that we do recognize. But where we're sitting as a department is implementing what the legislature directed us to do. So I would say, you know, the administrative burden, will certainly do our best to ease it as much as we can within our guardrails and what we can do. But I would say any of the like the broader policy implications around paid leave, I would certainly direct those, you know, to your legislatures who, you know, wrote the policy and set it for the state of Maine. But we will certainly do our best on the implementation side to try to ease as much administrative burden as possible.
The next question is, can ownership be exempted from this program similar to workers' comp?
Ownership, I would cautiously say no, because again, ownership, you know, you can be the owner and also an employee of a program, but the law doesn't carve out, you know, specific types of groups of people, again, with the exception of the federal government.
I think I can answer this next one really quickly. She says, did you say it's only paid in for 3 years? And the answer is no. I mean, this isn't going to be an
Oh,
ongoing program, but
oh
the
yes.
1% contribution is going to be just the 3 years, and then it's going to be evaluated.
Right. Yeah. We don't know what, I think it's till 2028, and then the department can, you know, reassess whether rates need to change. But I would say for 2025 to 2027, 28, the premium for this program will be 1%.
All right, the next question. How does this program work with other state leave laws if someone is a remote worker or travels, or someone otherwise qualifies for leave between Maine and another state?
Yeah. So again, that's sounds like a good question. So remote workers, the law doesn't, you know, categorize whether you're a remote worker or fully here. We have had a lot of questions from out of state employers who ask, I have 2 or 5 or how many ever Maine employees does this law apply? And the answer is yes. So if you are a company in New Hampshire and you have Maine-based employees, paid family medical leave will apply to them. You know, if you have employees that don't live in Maine and don't work in Maine and, you know, are not in Maine or associated with Maine, then likely no. But yeah, if you have Maine-based employees who you're paying a Maine wage to, then they would be eligible, even if the company is out of state.
The next question, I guess, is related to like supplemental insurance. I currently have income protection insurance that I pay through my health trust plan. Can I also use the new paid family leave? So I'll go a step further, and it's like, how do you synchronize this with, you know, if an employer has a short-term or long-term disability policy as well?
Yeah. So the law requires us to reduce someone's benefit if they are on unemployment or workers' comp at the same time. So by law, we have to reduce their weekly benefit amount. Supplemental wages around short-term disability or potential income protection. In the proposed rule, we did explicitly say what is not going to be subject to the weekly benefit reduction, but outside of unemployment and workers' comp, we have to, you know, other than those two, we will not reduce your benefit amount.
Similarly to the other question, if we are a multi-state employer, does the law account for only 15 Maine-based employees or all employees?
I would, yeah, that's a good question. I would only, you know, if you're an out-of-state company, you would only need to focus on your Maine-based employees. And you know, and that's where when getting back to the portal, you will need to self-report how many Maine employees you have. So if you're an out-of-state company with 100 employees total, but you only have Maine 15, then you need to really think about and focus on the 15 Maine employees. And I'll also say for the count, in terms of determining that count, it's per FEIN or federal identification number. So that's something that the employer is going to have to consider as well.
That was actually my follow-up, so thanks.
Okay. That was perfect. Yeah, it's per EIN. Yep.
So Reggie, we still have a few minutes left here,
Yeah.
but we have really a ton of questions. I see 36 in the queue.
Yeah.
I want to be respectful of your time. If you're willing to stay on a little longer, we
Yeah,
can keep
I am.
going
Yeah,
through
I'm
some.
free. Yeah.
But I'll also emphasize for folks on the webinar, because we talked about this the other day, is that it's important for employers to remember that the benefit side of this program isn't taking effect till 2026. So while a lot of these questions are related to benefits, not everything is going to be buttoned up by January 1st of this year. The things that are going to be buttoned up by January 1st are the contribution side and calculating the number of employers as to whether or not you're paying 1% in or just the employee part for smaller employers. So like Christine said, we will get answers to everybody's questions, even if we run out of time. But to the employers and the people on the webinar, don't panic too much. This is going to be an ongoing process, and things will also be clarified throughout 2025. And with that, the next question is related to teenagers and whether they count towards the 15, and I guess whether or not they're able to take benefits as well, if they're, 16 or 17-year-old, or even a 15-year-old.
Yeah, yeah. I'm not too much of an expert in labor laws. I'm assuming they have a valid work permit. Just basing it on that. But so I mean, if they are earning a wage for that employer, then yeah, 0.5% will have to be deducted. The law doesn't, again, distinguish whether you're 16, 17, or 15. So as long as you have a valid work permit, and you're paying them a wage, the 0.5% will have to be deducted.
The rate is set at 1% for 3 years, beginning in 2025. Can you speak to what we've witnessed possibly in other states who have had to increase their rates or change their rates as the programs evolve?
Yeah, that's a good question. I mean, I don't know what the future is going to hold, and I can't say, when 2028 comes around, we're gonna keep rates up. It will all of this will be dependent on, our actuarial study that we actually have to do. We're required by statute to do an actuarial study on, whether we have enough money to pay for benefits. And if we don't have enough money to pay for benefits, and this is where the paid leave authority comes in, okay, they could delay benefits or recommend the delay of benefits up to 3 months. So that's one of the things that we have to think about in terms of whether we will have enough money in the fund. But unfortunately, I can't speculate as to what Maine will do in terms of whether we increase rates or keep them the same. I do know other paid leave states have had to increase their rates for various reasons, but I can't speak to Maine.
The next question is the time frame deadline for notifying employees of paid family leave.
Yeah.
Haven't been able to find language relating to it. I'll emphasize once again, there's a lot of resources on your website. There's a really good FAQ on there that answers a lot of questions. So we've been sharing that. I know what my partners have as well. So
Good. Okay. Yeah, and so that actually is a good reminder. There is a one-page flyer, and thank you, Curtis, for kind of helping distinguish what you need to worry about in 25 and in 26. So we do have a one-page flyer for employers to think about 2025 and what you need to do and to think about. So that's one of our employer resources that we have online.
So what is the time frame or deadline?
Oh, for the notice requirement and so the statute doesn't say you have to get it out within X amount of days, but part of ensuring that employees have proper notice is to post that poster as soon as possible. Now that we've done our part and created this labor poster, I would just hang it up as soon as possible, especially before 2025, because the penalties associated with not complying with the notice requirements I believe it's going to be $50 per employee, and then any subsequent offenses is going to be $150 per employee. So that's the poster is one of the notice requirements. There's also another piece of the notice requirement, which is a good reminder. We still need to flesh out who the administrator will be, and we've publicly said that in insurance we will be going through an RFP process to identify an insurance company that will help us do the claims administration of it. So if you go through the statute and see this list of things that, the phone number of the administrator and all of that, that is something that we need to flesh out. And so, for the purposes of 2025, the labor poster should suffice as enough notice. As long as you get that to the employees and share that with them and post it in the places that you normally post them in.
Reggie, so as I said before, we want to
Yeah.
be conscious of your time. Are you
Yeah.
willing to stay on a little bit
Yeah.
longer? Or do you,
Yeah.
Okay.
Yeah. Mhm.
All right, Christine, I can't remember if it's my question or your question, but
I think it's my turn technically. But I was also scrolling through the amount of questions trying to see if we could help parse out the ones that are 2025 related and then refocus on the ones that are later on. But I don't know if I can do that as easily as I was hoping.
well,
The next
I can do one
Okay.
if it's helpful, because there was one in here. It's related to larger, well, I don't want to say larger employers, but employers that are thinking about opting out of the state plan. So the question is, do you anticipate the pre-funding tax on employers and employees who intend to opt out of the state plan to be dropped from the final rules?
Is it going back to basically
I think
everybody's in for a quarter and then get a
yeah, I
refund
think
for it?
it's that first quarter question.
Yeah, so we don't anticipate any refunds to be given back to employers, assuming they apply and are approved. I think just kind of taking into account what we put in the first proposed rule was saying everybody's paying into a quarter or longer than, over a year and a half versus a quarter. I guess that's where we're landing at the moment. So everybody who's paying in from January to April will contribute to help build the fund, but there will be no refunds given, assuming that you're approved for a substitution.
I do see two more questions specific to addressing mental health. And so I think we spoke to that a little bit, but if I'm understanding your response correctly, it's really going to be dependent on the applicant's details and how that may qualify. And I don't know if we have more to add to that right now.
Yeah, it all just depends on, the certification that we may require to, if they go. So yeah, so I guess it will all be dependent on the information that they provide to us and then any certification forms that are required to determine whether, whatever mental health issue. And I'm not a doctor, so I don't want to speculate as to what is a mental health issue. But it would all of the information that we receive, including any information from the medical provider, will be helpful in determining whether it meets the claim. One of the 4 reasons you can take leave for.
This next question is related to, it's asking about churches and nonprofits, but I know in our discussions, and you said in the beginning, with the exception of federal employees, everybody is included. So that's including your town employees, teachers, it's not just private businesses, it's everybody,
It's everybody. Yeah, essentially, yeah, except for the federal government. Public employers are in, and I know it gets a little complicated because many public employers have collective bargaining agreements. So, which is a separate issue that we've hopefully tried to clarify through FAQ. But yeah, everybody's pretty much in except for the federal government.
All right. The next question again is about private plan approval and what is the process. I'm wondering if this too might possibly be asked in the scope of a smaller employer who is looking to determine whether or not they might have or be able to execute a substantially equivalent plan and what that process looks like.
Yeah, I would say when the rule is adopted, that I think would be helpful. That'll be a piece of helpful information for the employer to kind of navigate and shop around and to determine whether they want to pursue that process. So I would say the final adoption of the rule is one thing, and then we are looking at trying to provide more information, before the application process goes live. But I would say when the rules adopted, that should hopefully give you the first piece of information to think about in terms of whether you will purchase a plan or currently have a plan that meets that criteria. But we will put out more information before go live.
All right, so I'll ask one more question that I saw in here that I thought was interesting, and then I'll actually ask Tony and Nate if they have any final thoughts, but then we'll wrap it up. And then, like I said, any questions that aren't answered, we'll follow up with you, Reggie, and make sure attendees on the webinar get answered. But
Mhm,
this one is related to temporary employees.
mhm.
You indicated they need to be counted, but we have none of their payroll information or records. So who is the responsible party to maintain that employee in the portal, the temp company or the employer utilizing the temp employee?
So that's a good question. So it depends on what the relationship is with the employer and the temp company, because the employer or the TPA, so assume it's a payroll company, will have to do the self-reporting of it. We won't know until we get that information inserted into the portal. But I would say the employer and the temp company need to probably start having these conversations now about that, because that is a good question. But we unfortunately, I don't know if we can provide guidance on that. It's a good question.
Tony, Nate, do you have any other thoughts or lingering questions?
No, I just want to thank you, Reggie, for doing all these. This is a great opportunity for especially all of our memberships. I'll just say that we just at Hospitality Maine just had our annual summit, and something that distinguishes maybe our associations from others is that we have a lot of independent restaurants and lodging establishments that have a lot of, they're not a lot of employees, so they're smaller businesses. So the recurring thing I heard is the impact that the absences will have on business. So
Yeah.
just thinking about that as you're finalizing the rules, and especially because it'll have a disproportionate impact on smaller businesses than larger ones.
Right. Yeah. Yeah. No, and again, no, thank you, Nate. Yeah, we certainly have heard the impact that this is going to have, and we recognize that, and we hear that, and again, we'll do everything that we can in the implementation process to try to ease the burden on both the employer and the employee, because again, both entities have a stake in the process. But I would say also too, like any of those broader general impact on businesses, I would also just encourage folks to direct it to the legislature, because they are the policy making body, and they probably need to hear that.
And that's a great point to end on, unless Tony, you have anything, or are you good?
I'm good.
Okay.
A lot of great
All right.
information. Obviously, that's ongoing.
Yeah.
Mhm.
So Reggie, you alluded to the legislature there.
Mhm.
And so, all of our associations, as you know, are very active up at the State House. And I guess it's our understanding that going into this next legislative session, it's very likely there's going to be some sort of administrative cleanup bill to try to answer some of these lingering questions or, issues that you're aware of, but just haven't been clarified yet. So this
Yeah.
is really more for our attendees. Just know that as associations, we're going to be reaching out to our members for you to provide input into that process, because we're with you. We want to try to provide clarity where we can.
Mhm.
This program is coming online, and we need to figure out how it's going to work and work out those details. So that's why we as associations exist, and we really appreciate everybody's participation in this. And I have no doubt this will not be the only webinar we will do on this. We'll continue to do these throughout the coming year. So with that, I will wrap up today's presentation. A sincere thank you again to Reggie. And thank you to everyone joining us today. We encourage anyone who has any questions to reach out to any of us and visit the Maine Department of Labor's Paid Family Medical Leave website, sign up for their email notifications and updates on the program. And as I said before, there's a lot of resources on there for you already. So please take advantage of that. So with that, thank you and enjoy your day.
Thank you all.